What's going on, everybody? Anthony Campos. Today we're going to go over what are interest rates like today. Well, it's not really a one-size-fits-all answer. It really just depends on your situation and what are we doing. So I'm going to go over a couple of different factors on what determines your interest rate. So let's get into it. Number one is going to be your credit score. Usually if your credit score is higher, 740, 700s, you're generally going to get a lower interest rate. So the bank is going to look at this credit score. Number two is going to be whether this is a purchase or a refinance. If you're purchasing, the bank wants to know how much down payment you're bringing in. Is this going to be 5%, 10%, 20%? Generally, if you're bringing in a larger down payment, your interest rate is going to be lower. Now, when they're looking at this at a refinance, they're going to look at the loan to value. What is the loan to value on the refinance that we're doing? If the value of the home is 500 grand, and our loan amount is 250,000, our loan to value ratio is going to be 50%. And that's pretty low. Usually if you have a lower loan to value, your interest rate is going to be lower because the bank sees this as less risk, knowing that they have 50% still left of equity if you were to ever default on the payment. So usually as you start climbing on that loan to value, 60, 70, 80%, that interest rate is going to start to increase. Number three is going to be occupancy. Are you going to be occupying this home as your primary residence, or is this going to be an investment property? When the bank is giving you a loan for an investment property, they see that as a riskier loan to give out because you're not living there. They know that if you can't make the payment on an investment property, you're not going to care as much versus if it was your primary residence. So an investment property, you're usually going to get a higher interest rate versus if you're actually at the property, they're not going to hit you with that investment property hit on your interest rate. Number four is going to be loan type. Are you dealing with a conventional loan product, an FHA loan product, VA loan product, USDA? Each of these loan products have their own interest rates for their borrowers. Number five is going to be loan amount. There are conforming loan amounts right now, and it depends on when you're watching this. The FHFA increases those every year as prices go up. So it just depends on when you're watching this, but what you need to look out for is what's called the conforming loan limits. If your loan amount is within the conforming loan limits, you'll tend to usually get the best interest rate. But if you're above a conforming loan limit, depending on your county, your interest rates will start to get a little bit higher. They're going to hit you with a jumbo or a high cost loan. And then last but not least is going to be loan term. Are you doing a 30-year loan term or a 15-year loan term? If it's a longer loan term, you're not going to get as low of an interest rate versus if you did a 15-year, 10-year, etc. These are a couple different factors determining your interest rate. So when someone asks me, what are interest rates like today? It really just depends on your situation. So if you want to know what your interest rate is like today, send me a message and I'll be happy to help you out. Thank you for watching, and I will talk to you soon.